Let's welcome on board Rana B Gupta as well, MD at Manulife INVESTMENT MANAGEMENT, to talk about what he's making of the various headlines right now. Rana, hi, good morning. Great to have you on the show. How is it that you're reading into Fed's commentary and then, of course, Janet Yellen's as well last night?
Look, I think those comments, they will take care of the market conditions and, with the way situation evolves, it is very volatile situation out there. But overall, if you take a slightly medium-term view, overall, we think the risks of the contagions will be contained. There will be adequate policy support given that way. As a result of that, I think the markets will continue volatile for the next month or so. But I think the situation overall should settle down. And we don't think that this will unfold into any sort of crisis. What it can mean, though, can happen is that the U.S. growth might moderate going into the second half of this year.
Rana, FIs are selling into India. Is that a compulsive factor because of redemptions, or this is a choice where China looks better than India? And do you think this trend is here to stay?
I think this trend has been there for some time. I think sometime from late last year. The few reasons, what at least we understand. See, Indian market has been a performer in 2020, 2021, and 2022. So there is some profit taking. Plus, there came China reopening. So therefore, some switch of assets from India to China we have seen. Right now, I think globally stock markets are in a bit of a volatile mode, so people are doing their adjustments. But I do not think the situation is permanent. I think ultimately the broader signs are getting clearer, which will of course take medium to long term to see effect play out. They are US dollar is peaking, then the rate peak is in sight, emerging market growth and emerging market balances are better. That overall sets a pretty positive construct for emerging markets. And within that, because of the reforms that happened in India over last 10 years or so, I think it looks pretty attractive. So I do not think this FI, selling is a long-term thing.
So can I say that forget what others are doing, Manulife is not selling Indian stocks?
I won't be able to give insights into that, but I think we are longer term remain quite positive on equities.
What do you own in your long-term portfolio where you say, I don't care about Fed, I don't care about 2024 elections, I'm going to be a buyer because I think 3 years out these stocks will be bigger, or these companies will be bigger?
Yep. I think there is merit in that kind of thought process, because again, if you look at if you look at a 3-year time frame and see what's going to happen, I think the digital economy is booming, and that is not just helping, let's say, our .com or internet companies. I think this has been a game changer for the banking companies in terms of their, in terms of controlling their costs, and also various other companies to increase their productivity. And on the other hand, because of the physical infrastructure and the PLI schemes, all the tax cuts, I think manufacturing in India is growing. And this is further helped by the China Plus One, the multinational companies' desire to have alternative sourcing base. I think Indian manufacturers are seeing a lot of inquiries. So I think this stocks from the banking and the industrial side, they look pretty attractive in a 3-year perspective, from a bottom-up perspective as well.
Time to connect. All right. Thank you so much then, Rana, for joining in, of course, and giving in your views. That's the take coming in on commentary from the Fed as well as the India portfolio.